this week in the market has been honestly a little bit crazy. I've had too many option trades go against me, sadly. We also have crypto has been falling, so we're going to talk a little bit about that. And the markets are just a little bit wish-washy as we had first the options expiry, and then now we had the Thanksgiving, the shortened week and everything along those lines. So I'm going to turn it over to you first, Jake, to maybe just give a little bit of feel on, how this market is going for you. And then let's talk about any specific tickers you're looking at today.
Yeah, I mean, market's going good. It's been a good month. You know, you the market hasn't really moved much. You've been pretty much stuck since the beginning of November, but you've had some individual names do pretty well. Same today. Today you had a pretty nice spike this morning. Markets didn't really show any type of strong moves, but some individual names did, and that's something that I learned a few years ago, or not learned, but kind of finally kind of got in my head is, you know, I think JC Peretz was the one, or maybe it was Brian. It was at Brian and JC's conference like 3 years ago, and they would keep saying, the market is a market of stocks, and I really never understood kind of what that meant, and then I'm like, oh, just because the S&P 500 is not doing something, or just because the Qs aren't doing something, doesn't mean that the rest of the market isn't moving. There's always, an opportunity, and if you're in the right mindset to take advantage of, opportunities in the market, sometimes it's just not your week or not your day, and don't force any trades. And like this week is like very low volume. The first solar trade that I took yesterday was one that I did think we were going to get a spike. I thought we were going to get a gap up, and we didn't. It just intraday moved like crazy, which actually helped out the premiums even more since you got that spike. But generally, I'm not really trading options during this week. This was definitely.
Cut out for me for a second there.
It wasn't. Can you hear me?
Yeah, we can hear you now.
Okay, sorry. It wasn't one of these calls that expires in 2 weeks. You'll never see me take a trade like that. So generally, when I'm trading options, I'm going out at least 2 months, sometimes three, depending on how far it is until that third month. So yeah, it's been a good week. I did get into a couple common stock positions today. So once I sold First Solar on that impulse move to like 110, I ended up starting to scale into some common stock because I still like the setup. I just think that going into the rest of the week, getting into options just probably wouldn't be the best idea in my opinion. You've got literally a half of a day on Friday, and generally it's there's just not going to be a ton of liquidity. I don't think so. But yeah, F cell, that's one I like a lot right now. I posted a chart of that earlier. I actually made a video using the Williams percent range, and of course it didn't freaking post on Twitter, so that's annoying. But I'll kind of go over that chart if you can pin it. It's one of the more recent charts that I posted today. But yeah, that's kind of my thesis. There is, I do have kind of a top down approach. I definitely need to see the market showing some strength, and you know a little bit of a problem with IWM is so many people are like just waiting for this thing to bottom, which is a little concerning because it almost seems like a crowded trade. But at the same time, there have been, now this will be the sixth red day in a row, and I'm just thinking, we're probably getting close to at least a short term bottom, which I wouldn't be trading IWM, but I'd be using it as I'd be using F cell as kind of a proxy to take advantage of IWM possibly moving up. So I took F cell. The thesis is in the chart that you just pinned. And essentially, the way I like to use the Williams percent range is very similar to how Brian taught me how to use the anchored VWAP. I'm generally looking at a Williams percent range, and that's just an oscillator. It's essentially a highly sensitive RSI that on specific stocks really can show some strong signals. But One thing that I think some people don't always look at is the trend, right? You need to look at the trend rather than just start looking at a signal over the last year. The way that Brian taught me to anchor VWAPs is starting from a specific point in time, whether that's swing low, swing high, a capitulation point, earnings, something where the status quo of the trend has changed. And so for me, when I'm looking at FCell, notice that I'm using that signal when it's oversold after we bottomed at that pivot. So I'm not looking at the percent range over the last 2 years. I'm just looking at the percent range in this current uptrend as we're hitting higher lows, and that's where my signal comes from. So based on that signal, the previous returns have averaged about 50% over 10 days. Do we get it? Maybe, but the risk is pretty defined. It's just the previous low from today. So that would be an area where I'd look at stopping out. But for now, the markets are just very quiet right now, and not incredibly shocking for this week. It's just kind of shocking that we didn't get the low volume melt up that we generally do this week. But that's the market. It's you got to take price action the way it is, not what has happened in the past. It's looking at seasonality, and I saw Brian post about something about this yesterday, I think. Seasonality should never be used on its own. I'm sure a lot of people looked at seasonality for this week and said, "Holy crap, this is time to go all in." Uh, Seasonality should always be used as a complement to price action and technical analysis and another tool in the toolbox. You never want to, look at even FCell. Like, sure, there's that signal with the percent range, but I have other variables that are kind of pointing to this being a bottom. I'm looking at IWM. I'm looking at just the overall, signal there with the fact that it is holding these higher lows, something that a lot of names haven't been able to do over the last week or two. So you always have to take into account all of the things in the equation rather than just looking at seasonality and assuming because in the past Thanksgiving's been a strong week, it's going to be a strong week again this week because it clearly hasn't.
Great points there. Yeah, it definitely has defied the typical seasonality, which was something that we talked through. And a lot of people have been talking about how this is the day traders market, right? Get in, get out. And I think you also made some good points there. We talked last week on a space and you pointed out FSLR then, but, your point here was to use options that were a couple months out. And I'm sure that's something that you talked, Christine, about, theta decay. And with those options about how if you were to go weeklies or next week, you might have gotten completely killed on them, right? Because maybe that move wasn't large enough, but on the ones that were farther out, there could be a lot more potential for them. Awesome. Thank you so much, Jake.
Yeah, thank you.
Okay. We're just going to go around and get everyone's initial sentiment, and then we'll dive into some specific names. Brian, same question to you. Thoughts on this market right here, and then maybe some names that you've been trading.
Yeah, Gav. So the market. I loved the fact that so many people on Twitter were pointing out that Thanksgiving week is 100% chance that the market is higher, and it still might end up being that way toward by the end of the week. But right now we're right at the volume weighted average price for the week, basically making it more neutral from anyone who's participated this week, although it's down slightly, for the week so far. But, we've had a huge run. We had a breakout on Monday, which, so far hasn't led to a failed move, fast move lower. But if we take out the lows of yesterday, I'm a little bit concerned that we could be in for a deeper pullback down in the S&P 500, initially towards the 460-ish level. And I think that would take a lot of people by surprise. We've seen a number of high-profile names getting just destroyed. One of them I did very well on that we spoke about last week, which was Zoom. I hadn't had made the purchase when we spoke last week, but it was actually because of discussing it with you guys that I decided to go ahead and buy some puts in Zoom, and I'd covered 2/3 of them before the earnings report, and then the balance yesterday morning as the stock just got smashed after earnings beautifully, Monday morning that is. So, there's opportunities on both sides. I think it was probably me that Jake was referring to because JC does a lot of macro top down stuff. I'm completely bottom up. Each stock on its own merits. People always say things about, well, the yen versus the dollar, and it's got nothing to do with the stocks that I trade, or the relationship, this relationship versus that relationship. I think you keep it simple and trade each stock based on its own merits. You want to be aware of the overall health of the market, but I find that the setups simply aren't there when I do my homework each day, and I see that the setups aren't there. And then I'll start getting stopped out of some of the longs that I'm already in, and then the market will start to decline. So I think that you've got to you get a better feel for the market by looking at a larger number of the constituents in the market individually, and then coming up with the overall feel of what's working, what's not working. EV stocks are doing well today. I'm in XPEV. I'm in GOEV. I'm actually in some GOEV warrants, which a lot of people overlook. But it's to me, it's always a selective market, and if you listen carefully to the market, it will tell you when to be in and out, and it depends on what your time frame is. For me, it's a swing trader's time frame. It could be anywhere for a couple days to generally 2 to 3 weeks. And I'm always more cautious, and I don't buy stocks that are below a declining 5-day moving average. And that has saved me millions of dollars of mistakes over the last 30 years.
Can you elaborate on that end part right there and exactly how it saved you?
Yeah, from doing stupid shit like buying stocks that are in downtrends. I see it all the time. People say, hey, well, PayPal's a good company. Pinterest is a good company. Roku's a good company. Over and over again, and they end up kind of bullshitting themselves saying, well, I like it for the long haul. And then they're willing to write it down 50% rather than why start buying the stock when it's in a downtrend? We mentioned this last week. If they don't scare you out on those big drops, they will typically wear you out because markets correct price-wise and time-wise. And for a stage 4 decline in a daily chart, you've got to put in a base. You got to put in time. You've got to turn over the float and find new owners, and that takes time. So, people. I think you said yesterday. Or the Wolf Channel, would you buy Zoom here? And I said, hell no, because it's a broken stock. It's in a downtrend. Even if I was a long-term investor, I would want to see signs of stability before buying this. I'd want to see the 20 and the 50-day moving average at a minimum flattening out, and that's not going to happen for several weeks here. Once in a while, you get stocks like that will recover all at once, but that's the anomaly. Just there's so many good stocks and uptrends. Focus on those. And the beautiful thing is, there was an event here in Zoom, so I had bet on it with earnings. I limited my risk. The position moved a little bit for me. I was able to cover, sell 2/3 of my options and take out all of the risk. And then I had 40% of the, so I had 4 puts left that went from $3 to an average of 30. So, those are opportunities out there, and I had those for free basically because I, managed the risk ahead of it by taking some off.
But sir, Kathy Woods is buying at these levels.
That's a great thing for her. I mean, and the thing is that a lot of people talk about that and rag on her, and I point out what's going on with her fund, and the fact is, it's below the volume weighted average price since the inception, meaning the average participant who's been involved in that fund since the inception is losing money, and she has a completely different time frame, which is 5 to 10 years. But do her investors share that time frame? I don't think they do. They look at this stuff and they see, why is she still buying, Zoom down this much? Why not just let it bleed out? She's not going to, the stock's not just going to turn around. Be patient with it. And if she's buying it, that's great. I mean, it's too bad she was buying it because I probably, those puts would have gone to 35 instead of 30.
The reason I said that is because I posted a PLTR chart like 2 weeks ago when earnings came out, and clearly the chart was broken at that point, and you know, I think it was 23.50 or something. I was like, hey, you know, it looks like 20's coming. And I had a lot of people reach out saying, well, Kathy Woods just bought a ton and so did Morgan Stanley or someone else. And like you said, yeah, these funds may have a completely different time frame. You know, you've got people that will buy weekly contracts because she bought something or another institution bought something, not realizing that this could be a much larger kind of scale and approach rather than, you know, in 2 weeks this thing moves up.
Yeah, and that's an interesting stock. I can't the number of tweets I see on that stock, and it's just completely wasted so many people's time this year. I just don't get the appeal of Palantir.
I think it's just the PLTR is easy to say.
I don't know. Whatever it is, it's an odd psychology.
Could it be, I think that there's this whole mentality that like data is the next hot commodity and you can never have enough of it and you want to analyze it and we have no idea what the real value is of data. I think that's kind of what they've kind of sold to people.
Probably, Gov, but looking at the chart, you just see a choppy mess, and that who cares about the story? We're not here to make good stories. We're here to make money trading, and if the technicals don't line up with the story, then just leave the story alone. And if the story does line up with the technicals, then sometimes it gives you that extra confidence to push a little bit stronger on your position size. At least for me, that's
Definitely makes.
like it.
Yeah, that makes sense to me. Awesome, Brian. And let's get Nick involved before we go into also some more specific names. So, Nick, what's your thoughts on the market right now?
Yeah, so beautiful stuff by both Brian and Jake. And to go back to what Jake said earlier on, he talked about, and I think he basically like was quoting Brian as well. The market is basically just about how these stocks move. And I was looking at my watch list this morning. One of my watch lists, I'll say, and it's just basically literally just 100 plus stocks that I wouldn't say 100. It's definitely not 100. It's probably about 50 stocks that I trade and look at and kind of see what's moving and what has the most strength every morning and stuff. And so when I first looked at it in the morning at 9:30, there was 4 to 5 of them that were green. After about 30 minutes, there was about 15 of them that were green. So it started to keep growing and growing. And just at around 9:45, when I looked at it, that 15 minutes later, started to get halfway green. So about 20 to 25 of them were green. And I looked at S&P 500 futures, saw that the market was holding just at around that 4660 area, which was an area, it kind of stood around yesterday as well. And so just based off my watch list literally going green and the market obviously holding areas that it was kind of sitting at around yesterday, I went long on that trade going into 4676, where I sold off all my trade on that. Then looked a little bit down right to 4670, where it obviously had resistance and or support yesterday and today, and played it again all the way up until the market went green. So the reason why, I kind of did that as well is I saw the Qs were going green. I saw Amazon was going green, Apple, all these things were turning around. You just have to use everything to your advantage and look around and see, how everything is reacting, how everything is moving, and, kind of just put all the pieces together to, form a trade. Now you could do this for, sector-based trades. So example, for chip stocks a week or two ago, I was basically playing all of them because one, they all were getting great earnings. They all were moving together. And for example, Qualcomm had a conference and, they made other stocks move up. Nvidia had earnings, made, the other chips move up. So stuff like that. Overall, seasonality, we're expected to close green this week, like Brian was saying. And I really don't know if that's going to happen or not. We still have an hour and a half plus, Fridays, a couple hours. The market definitely has been a little choppy. I would rather see us just take the dip and move it down now. So if we do get that end of year run, like, normally does happen at least. we at least get that dip before it happens. I'd like to see a move down to 46.54 to 46.86, so about 100 to 130 points down on ES from where we are currently. You know, it just all depends what happens. I'd rather see that move, but I'm not sure we're going to get it. And, something else to take into effect is one thing I was looking at today. So VIX opened at just about $20. Wait, hold on, let me just double check. Yep, just opened at around $20.30 today. So it made new highs this morning at 20.96 from yesterday's 20.91. But since the market has went up and by the market I'm referring to ES, since the S&P 500 futures has went up 25 to 35 points here, VIX has only really fallen about 80 cents, and it's kind of played around here. Or sorry, it's fallen about $1 now. And it's kind of played around here, and it still seems like it's holding strength. I really don't think the market is ready for a move up yet, and I could be totally wrong, but you're just kind of seeing weakness, across the market and just flat movement across the market. Of course, people are traveling today and so on and so forth, but that's kind of where my thesis is right now, and we just kind of really need to see how it plays out going into the rest of the day today, the hour and a half, and Friday, and of course next week we'll get a better look on where it's going, as well as I saw Monday that VIX and I think it's the SPX started trading 24.5 or 24.7, whatever it is. So that's another thing that could add volatility and mess with the algos as well.
Sounds good. Yeah, keeping my eye on the VIX as well. Crazy volatility has been hitting this market. All right, about ready to get into it. Evan, anything you want to add on market sentiment? I know we did one last night.
Yeah, no, I think a lot of people were talking about this, but just the dichotomy in the market right now. It's someone said it earlier. It's the stock market is a market of stocks. There's stocks that have been doing really great recently, hitting near all-time highs. The market's right at all-time highs. Then you have a bunch of stocks that are in correction territory and have been down big. And it's interesting to see that what was working for the last little bit, a bunch of those stocks are in that correction area. So, some of it might have room to go lower, but there also could be some good opportunities there. So just always searching. I have a couple of stocks I'd love to talk about it, but I think we'll get that a little later and let you continue.
Well, how about I throw a few at Jake and then you throw a few at Brian? Let's roll with that. So, Jake, I'm going to throw some large caps at you first that I saw you charted earlier today. Would love to get some more thoughts on them. So, Facebook, Apple, and then another one, which not quite with those, but Roku. Those were three that I saw you chart today. Would love to hear some thoughts on them.
Yeah, I mean, Facebook looks pretty good. It's this is one that is definitely not too tied to the market today. It's up almost 0.75%. But yeah, this was one that I was just looking at basic anchored VWAP stuff that I was taught by Brian. You anchor from the swing low and you get an idea of where price has respected this level in the past. And so when I posted it last night, I just saw, hey, the last couple times we've tested this swing low, we have bounced. And the thing is, you don't want to enter immediately. Maybe this is a time to enter because there's some strength, and especially relative strength compared to the overall markets. But yeah, pretty much just price respecting this anchored VWAP, which essentially means that you have some supply drying up down here, as the average participant since the October 28th low was now back to break even. So sometimes you can get a bounce of these anchored VWAPs simply because supply dries up, because nobody has any more profits, or the average participant doesn't have any more profits to sell or scale out of. So if you want to show that one or pin it, I did post that one last night, kind of showing the visual there, because a lot of this that we talk about is very visual. So some people are probably like, "What the hell is he talking about?" If you can pin that post from last night, that was the thesis going into today, and so far we've got a nice bounce.
Definitely a good one. Yeah, I played Facebook last week, and then I rolled up, and unfortunately, I got a little bit killed on the roll up because I got greedy and didn't take the small bit of profit. And now I'm learning, in this market, when I see green, I take it. And I just, move on from that, move on to the next opportunity. How about, so I'm pinning Facebook and Apple and Roku right now. How about those other two?
I don't even remember. Oh, I posted the monthly chart on Apple. Yeah, Apple's just kind of consolidating a little bit. It definitely helped the markets look like they were doing better than they were. But for now, it's just kind of stabilizing. The chart I posted last night was the monthly chart that shows this longer term ascending triangle breakout, and then retest of that resistance, and then continuation up. So if this were to continue the same path as it has, this really doesn't have a lot of supply at all above, since we're at all time highs. So that's when you can either use Fibonacci levels, Fibonacci extensions, because if you don't have any pivots or any price levels to look at to the left because you're at all time highs, you have to use something. And so a lot of people use Fibonacci extensions. That's why they kind of become self-fulfilling prophecies. And then I also like to use diagonal zones. Some people don't like diagonal trend lines or zones, but I'm studying for the CMT right now, and the overall thought process of trend is higher highs and higher lows that are connected by these points. So I like to use diagonal zones when it makes sense, and for Apple, that's why I have that zone above, which if price continued to grind up over the next year, would put this into the 200s. And then what was the other one? Roku? I don't remember.
Yeah, the fallen knife.
Oh yeah, ooh, yeah. The Roku chart. I mean, I'd be shocked if it didn't have some type of bounce. This is the fifth red month in a row. It's only down like what 50+% in the last 5 months, but yeah, this is one that does have a longer term breakdown. If you were looking at chart patterns as like blackjack hands, this would definitely not be one that you want to press too hard if you're betting long. But who knows? You could get a little bit of a bounce. But as Brian mentioned, the trend is clearly down, and why would you want to go against the trends here? And yeah, I think this is another one that is a pretty heavy position in Kathy Wood's portfolio. And Brian had mentioned, maybe she's getting shorted on a lot of these names, which is exacerbating the entire move of some of these names to the downside. But you have a little bit of a promising candle today, but I wouldn't say it's any type of guarantee of a bottom. The percent range is showing a little bit of divergence, but divergence is something that you have to use as a tool in the toolbox, like everything else, like seasonality, all of these things. Just because there's divergence doesn't mean all of a sudden things are great. But you are starting to see a little bit of a inefficiency there with these lower lows and these higher lows on the Williams percent range, and that's kind of my main indicator I look at for when the trend may be turning, whether it's overextended to the downside or to the upside.
Jake,
Appreciate that.
if I could jump in there really quick on Roku, if you look at the COVID low back in 2020, down near about, I don't know, what was that, about 60 or so? I'm just eyeballing it. Let me see. Right about 60.
Oh wow!
The volume weighted average price off that low we're hitting today, and if you also take a Fibonacci that is, starting from there up to the high that we saw, we're also right now at a 61.8% retracement of that entire range, and they come together almost perfectly right here at about 229. Both of that anchored VWAP and that 61.8% retracement. So going back to a lot of times things in the market become a self-fulfilling prophecy when they're individually important. That's something we want to pay attention to. So, for instance, if there's people who stop shorting at that anchored VWAP, that removes a source of supply. If longs stop taking their profits or selling their losers, add that VWAP, that's less supply. If shorts start to cover there, less supply. The supply and demand. How do people make their decisions? Sideline money might come in and say, hey, it's at that VWAP from the low, I'm going to start to nibble on it. Well, that's great. That's the VWAP people. Then you've got the Fibonacci people who say 61.8% often acts as support. I'm going to stick a bid in. 61.8% is often support. I'm going to cover my short. So it's, trying to understand the psychology of why these indicators and oscillators and tools that we have become important in certain areas. It doesn't assure that this is going to be a low, and I would not buy this with anyone's money on this call. To me, it's an avoid, but I think that it's likely a lot of the downside is over. It's probably experienced its worst part of the correction price-wise, but now it's going to just waste your time for the next 6 to 9 months as it builds a new base and new ownership comes in. It's just dead money.
That is, I didn't even see either one of those, so thank you for pointing that out. That is beautiful.
It's just information, though. Only price pays, and the trend is lower. If they, for a time frame, Kathy, go ahead. Go, 5 years from now, you might be okay. I don't know. Who knows?
Maybe when Kuba's in college, we can buy this now, and he'll be good by then.
Could be.
The college fund, never too early to start. Real quick, 2 things before I throw it over to Evan, who I think has a couple of names that he would want Brian to listen to. The first off is, if you are enjoying this, we have like 900 people in here. Make sure that you're checking out our speakers up here. Brian, Jake, Nick, G-Knots, really, really talented. These are guys who make their full entire living off of trading, investing, teaching others how to do it. Some of the best you're going to find. I'm excited to ask Brian a couple questions in regards to anchored VWAP. I was going to throw that over to you and talk about maybe where you're anchoring that on some of the indices. But I'm going to let Evan throw over a couple questions first. And then the other thing is, as we're talking, we've been pinning some charts up top. All of us, I believe, that are up here, I see Nick is reconnecting, but I know Jake, who works there, and Brian, who created some indicators, use Trendspider for our charting. Trendspider is a great platform for charting and so much more. And if you are interested in getting into this right now, and clearly you are because you're in this space, now is the best time of the year because they're doing their biggest sale of the year, and that is, I believe, 60+% off for Black Friday. So I just posted, and I put out a link that you can use, I believe, to get that 65% off. So I will pin that into the space as well, but it's the last post I just put up. And I'm also going to put up another post asking if people have individual tickers. In fact, use that one if you want an individual ticker. Just go to this post. I'm about to put it up in the space and just comment tickers that you would like us to talk about on it. And make sure you take advantage of that. You're not going to see 60% plus deals like that very often from Trendspider, which is just a fantastic platform. Okay, with that being said, throwing it over to you, Evan.
Awesome, thank you. Yeah, no, I definitely agree. Trendspider is definitely an amazing platform. Would definitely advise anyone to check it out. It's great use. Couple tickers. I'll keep it short. Let you get back to your questions. But first one I have is Boeing.
Is it Evan? That's a question to me. Is that right?
Yeah, perfect.
Okay. A couple things on the Boeing chart. If you look at a weekly time frame and go back to the peak in 2019. And put a VWAP on that, it's pretty uncanny that, the bounce from how it became resistance on the first bounce off the 2020 low, and then it's been holding a support, and it's really riding that right now. The problem is it's also pinching between the year-to-date volume-weighted average price, which has kept a lid on it for the last 3 months, as well as it rallied almost precisely to the volume-weighted average price off of the March high. I think that the path of least resistance here is lower in this stock. It's neutral at best, but if it breaks below this, 203-ish and holds below there, then you're likely to see it move down towards about 190, which is where we have the volume-weighted average price off of the COVID low. So I'd be really skeptical on this. I certainly wouldn't short it, though. below that 203 level unless it first rallied up to 220, made a lower high, and then started to break down. But right now, we've seen it drop from 230 to 210 in the last 2 weeks. You don't want to be shorting after a large drop like that. So it's neutral at best. I would, think that, it's also trapped below the 200-day moving average. So that it's just, I would avoid this one.
Awesome, thank you. I appreciate it. I have two more. I'll be quick with it. Next one I have for you, Brian, is Airbnb, ABNB.
Yeah, I had been involved in this one, and it kind of failed. It gave up that entire gap off of the earnings report. Here's one that the volume weighted average price off of the earnings report. It got stuck below it last week and really got hit hard this week. It's trying to stabilize again right here at the 50-day moving average, and you've also got the August low, the volume weighted average price right here. If that fails to hold, then I think you're headed most likely down towards the 200-day moving average, which is 166, and that's also the VWAP from the July low. So near term, the momentum is lower. It would be nice to see it stabilize in here, but we're not seeing that so far. It's stuck below the declining 5-day moving average. It's a crap shot to buy it here. It's too late to sell it, and it's too early to buy it. The risk is down to about 165 if it does continue lower.
Awesome. And I feel like this stock kind of follows a similar theme in its price action recently. So maybe we're gonna have a similar opinion on it. But Disney.
Disney's worse. Disney's garbage, actually. Disney broke the low that had been in place for a year. It's back below the volume weighted average price from July of last year, and just now maybe gonna make a reach lower towards about 146. That's the volume weighted average price from the COVID low. This just shows you that, people look at these types of stocks and they say, hey, gap from 175 to 165, it's a bargain. It's not a bargain because here we're down another 10%, 10 days later, and it's just not worth it to stick your neck out there and get it chopped off being early. So, I think it probably has room down, like I said, to about 145, 146. And even there, it's not guaranteed. It's just going to turn right around. We've got a declining 20, 50, 100, 200-day moving average. Big money's flowing out of this. Why would somebody want to go in with a 500 shares, 1,000 shares, or whatever and feel like you're smarter than all the institutions dumping this?
Awesome. Thank you for answering my question, Brian.
Yeah,
Brian.
thanks for the questions.
Everyone in
Yeah.
the crowd, make sure you give him a follow. Awesome account. I would love to follow him. Check Jake out as well. And big shout out to Gob for putting this on.
Yo, Evan, did he just crush your spirits with that analysis of Disney?
Honestly, those were all stocks that I owned. So, but we'll
Oops,
see.
sorry.
PCA for the long term. I'm still good. Listen, I want
Hey,
Airbnb
Brian.
to go lower. So that one I was happy about.
Brian, what about PayPal?
It's another one. It's yesterday's news. For now, it's stuck in this downtrend, and people have been trying to buy the dip in here, and they're just getting annihilated. The stock's down, close to 50% now from its peak just 3-4 months ago, and the level of interest I see next on the downside is about 170-ish. It's broken below the COVID VWAP. It's not able to stabilize. It's probably due for a bounce, maybe up towards 200, 205, but I think that would just create a lower high as it continues lower and, again, needs time to stabilize. These stocks, once they're broken like this, they need time to heal. So my focus is either find a low-risk place to try to short them, or to in PayPal, you look at it and you say, well, the story's too strong to short it. I'd like to have a story match up with it. So it's more of an avoid. There's 5,000 stocks out there, and more than half of them are in uptrends at this point, maybe 2/3 or more. Why not focus on those if you're looking to make money on the long side?
Yeah, it definitely is one of those ones that just continues to keep going lower. I think it could find support a few more dollars down, but not touching it just yet. All right, Jake, I'm going to come to you in a second for some crypto ones, but first, throwing it over to you, Nick. Would love to hear your thoughts on MQ. That's getting quite the bid today, and a lot of people have been, putting this on my radar, and we talked about it in a couple of spaces.
You said MQ, correct?
Correct.
So let me just pull this up real quick. Market. Oh, so actually, yeah, this actually looks pretty good. If you go over, actually, you really only need to go back a month, really. If you go back, a month or two on the chart, you can see it actually did bottom around this area too at around $20. So that's definitely one key area that I'll be looking for. I'm actually going to mark that here right now. So yeah, I think the low right here is like 1990 or 1994. Definitely had a good day today, up just around 8 to 9%. And honestly, it could see higher here. I kind of want to wait for a little dip day. After a big day like this, it might need a little retest right there. But next level would be, for me at least, around 2360 to 2380. Maybe even if you just want to consider it 2360 to 24. And, break above that could lead higher into 25s and 26s. But does look like a good name, especially if that $20 does hold. One name that I've actually been watching recently, before I pass it on, is INTU, Intuit. Had a power earnings gapped up very large, over, let's just say, about $90 here, and just recently fell back down 3 days in a row. Well, yesterday now it went green, and today it went green. Looks like it's going to continue back up, and has been doing well even when the market was down yesterday and a little bit today. So that's also one to watch going forward, I think, as well. If anyone wanted to comment on that one, as well as Qualcomm is one I've been watching too, but I'm not. I'd rather play Intuit more than Qualcomm, I think, right now currently.
Love it. And definitely to my speakers, if there's, a specific stock, I'm just, throwing out ones that are coming across my radar that people are asking about. But if there's a specific one that you want to talk about, always feel free to throw it in there. Yeah, Qualcomm got a lot of action this week. Interesting to see Twitter getting some interesting, unusual options activity coming right now on Twitter, which has, I think, been building out a base down here. But Jake, I wanted to go to you real quick. And maybe Brian, you want to come in on this too with crypto. So, Jake, you posted about Bitcoin the other day. You weren't really loving the charts. I'd love to hear your thoughts on Bitcoin, Ethereum, maybe some Litecoin, just a few of the heavy hitters.
Yeah, so I don't trade crypto, but it's a crucial part of the way I look at the markets. It's probably my number one risk on, risk off type of indicator. If any like today, right? If any news comes out from the Fed or inflation data, you're going to see Bitcoin and Ethereum, and Solana is also one that I kind of have up there now for how it's acting, but. These names are looking a little iffy. I keep it pretty simple with my analysis. I'm just using the percent range for the weekly, weekly and the monthly chart, and you kind of have this thing where not only do you have some poor seasonality going into the end of the year for Bitcoin, at least. Ethereum's a little different, but you just have this pretty strong divergence, and this is the same divergence that I saw back in April before we absolutely got destroyed on the crypto side of things. So I'm really looking at it more as a risk on, risk off indicator, and that's kind of why I'm also going to see if IWM and some of these growth names actually catch a bid here. But generally, you'll see Bitcoin leading the way. So, I don't look at futures at night to see where the market could go the next day. I look at Bitcoin, I look at Ethereum, and that's kind of the reason why I was a little iffy this morning, because I'm like, well, Bitcoin got hit a little bit. We're below 50, 56 again. But then the news came out. I honestly still don't know what the news is. I was doing a presentation then, and I still haven't read what it was. But apparently the market liked it, and the price action continued to definitely get a little better going into the morning, into what's now kind of lunchtime for me, at least in Denver. But yeah, this is one of those things where I know a lot of people who love trading crypto. For me personally, I just like to turn off my brain at 2 p.m. Denver time, which is when the market closes on in Mountain Time. So I love watching the charts. I love providing analysis, mostly because I have no skin in the game, and I really feel like sometimes on Twitter you can see a lot of analysis that is a little biased. So I do think that if I were to rate this like, red, green, yellow light, I'd probably say kind of a yellow light on the medium term time frames on crypto for now.
Okay, interesting. Brian, thoughts on crypto?
There we go. All right, sorry. Yeah, the big ones are just kind of still consolidating these, little sell off. I'm not really too interested in Bitcoin now or Ethereum. Bitcoin to me, if it breaks below 55, I think you're going to head down quickly towards 50 even. So there's possibly another 10% lower. It's trying to stabilize at the volume weighted average price from the September low right here. So it's kind of neutral, but the area that's really exciting in crypto land right now is with the metaverse ones, and there are at least five of those that you can trade at Gemini, which is where I trade, and I'm long two of them right now. One is Mana, which is decentralized land, they call it. And this one, I don't know if we spoke about it last week. I've been in it since 372 about a week ago, and it's at 518 now. That continues nicely. And then Cube it kind of bounced me out earlier in the week, but I got back involved yesterday. And that's, got a beautiful pattern here. If you look at the daily chart, it, resembles a cup and handle. So those two excite me. I've got an eye on this one called 1inch in particular, if it gets above about 412-ish or so. And then what was the other one? Engine has been a good one for me, and I have no idea what this one is, so I'm very small in it. ENJN. But the big ones like Litecoin, I think it gave up I think it's broken. It had its rally. It's settling back down to the breakout point. It's going to need time. I don't see that one going anywhere near term. And Ethereum is holding up better than Bitcoin. As long as it maintains above that 4,000, it looks good to me. If it breaks 4,000, I think you see a quick drop to 3,700, which I have a bid in down there, and I also have a bid at the VWAP from the July low, and that's down at about 3380.
What do you like about Mana?
The chart. It's working well, and it's part of the metaverse hype machine right now. So I don't look at it and say, hey, I like this, and I like the way they provide tokens for buying stuff in video games. I don't play any video games or any of that. I mean, I'm in front of my machine all day anyway. Why would I, start playing video games after the
The
market
market,
closes?
the market is your video game.
Yeah, exactly. But I know that it's caught up in the hype of the metaverse, and I've scaled out of probably about 80% of what I originally had now, and I'm leaving this last 20% to kind of see if it does a real stupid move here to the upside. But if it's back below probably 450-ish, I'll bail on the last piece. I like to take the profits. I think it's sometimes it's beneficial not to know what they do, because you start to get married to the story and look at it and say, hey, well, this should do this because of this and that and what I read from this smart analyst, rather than paying attention to price action, which most of the time is really all you need to know, especially in the crypto land.
So with Mana, I heard scaling out there, which definitely makes sense. I don't know if this is a great entry point for anybody who hasn't been in it.
No,
up
definitely
hundreds.
not.
Yeah, up hundreds of percent already. Okay. Evan, did you have a comment?
Yeah, quickly on Mana. That was one actually. I had a dog in the background. Let me get out of here. But that was one I heard about a year ago from a friend who told me just buy and don't look, and I didn't. So I probably should have. And second, Wolf, I did forget to throw it out there. Can we get a 20, 30 seconds on the Google Calendar?
Ask and you shall receive. Real quick for everybody who's in the audience. Twitter Spaces are amazing, and we know that there's so many of them going on. Great way to find it. I mean, where else could you go and just listen to Brian, speak for free, and Jake and Nick, and just have a panel like this that can analyze stocks for free? And the best part is we do this all week. I am hosting over 10 spaces this week. I did over 25 hours last week of hosting, and I love it, and I love having several hundred people that can come in. But how can you know when these are happening? There is one simple way, because Google or Twitter Spaces has not invented any way to know when these are happening. The only way to know when all these are going to happen is by being on the Twitter Spaces Google Calendar. I have created this in conjunction with Stock Market News you see up here and Stock Talk Weekly. It is a free public Google Calendar that anybody can join regardless of what your schedule is. It is free. All you have to do is DM myself or Evan with your email, and we will add you to it. You can then toggle yourself on and off, and you'll be able to see when all the spaces are. That is it. That is the Google Calendar. Once again, free. If you're not already on it, just DM me right now with your email. I will add you right onto it. And just for everyone to know, this works. There's over 1,300 people on it, and people from Twitter have asked to be on it. So they know that it's working, and they know they don't have the solution yet. So that is what you need to be on with this. And also make sure you're following our speakers. Evan, anything else on that?
Yeah, honestly, just one thing you hit on there a little bit was that first of all, it is free, but also that Brian and Jake and Matt are up here giving away their knowledge for free. So, the least that we can ask for, the least that you should do, if you're not already following them, just make sure you are. I want to reiterate that. They're amazing follows, every single one of them. They're doing these spaces. I see them up there often. And yeah, just make sure you give them a follow and check them out.
100%. And just so everyone knows, we do all different types of spaces. This is a technical analysis and charting, but we cover everything, whether you're interested in crypto, NFTs, technical analysis, fundamental analysis, you want stock picks, growth, whatever it is, plays of the week. We've got it all, wrap-ups, earnings, news. This is literally my full-time job, is bringing you this content for free, and I love it. So make sure you're joining up with the Wolf Pack. And as long as you're following the Wolf Pack, you'll see them at the top of your timeline. Cool. Let's bring it back. I got a few more names that I want to run through. Brian, you have about 5 minutes left?
Yes, I do.
Okay. Can I get your thoughts on F-Cell? Looks like a nice setup.
Yeah, Fuel Cell just, it got a little bit ahead of itself here and backed away from the year-to-date volume-weighted average price. It came just shy of that. Now it's pulled back. I like where it has pulled back to, and it's starting to stabilize a little bit. I think that you give this thing probably Monday or Tuesday or next week, right around the $10 level, if it can show some momentum to the upside and doesn't make a lower low from here. I think you're looking at another attempt at that year-to-date VWAP near 1175, and the next attempt it probably pushes up through it. Especially if we do get some year-end seasonality strength. And thank you for bringing me a stock I like. Man, I don't want to be the guy who just says, no, I don't like that. It's broken. It's in a downtrend. I don't want to, but I just want to look at the stocks for honestly, just the way I see them objectively.
Yeah, with F-Cell, I mean, I'm looking for it to come back through that 200-day, as well as the 10-day EMA. That would be great. And if it could pop through those, that's where maybe I would go long. Does that sound about right?
Yes. Yep. Just another day or two of maybe sideways, Thursday, I'm sorry, Friday and then Monday, and then perhaps Tuesday of next week. It's looking good.
And Brian, when are you trading options versus commons?
Well, for instance, in Zoom, there was an event, and I certainly didn't want to hold common stock short in front of earnings, because if it went against me, it could have gone dramatically against me. So for me, it was a way to absolutely define the risk. I, bought my contracts, and I knew what the worst case scenario was, and it couldn't get any worse than that. So that in that situation, I use the puts in that case. Other times I will buy calls on some of the stocks that I'm looking at, and then I will scale out of some of the stock to get my calls for free so I can hold them longer, basically. So a lot of times, not a lot of times, but often I will be involved in the common stock as well as the options, and I will sell the common stock before I sell the options. And that's kind of what I'm doing with this GOEV. Like I mentioned, they have warrants. The stock is right now 12 and a quarter, and the warrants are, I'm going to call it 420, but they're 416. So, I've taken some of the profits out of the stock, and I'm going to hold the warrants because one, they hold up better. Generally, they don't bleed like, the options do. And they provide the opportunity to, put less capital at risk.
Yeah, I think that's a pretty good explanation of it. Jake, you put out a really good post about that earlier today as well. Outlining when you're going to use one versus the other. So make sure you're checking that out on Jake's timeline. Now I'm going to give Brian just a couple minutes to wrap up, but I'm going to keep the space running. I think Nick's probably going to hang out with us. I see Sarge in the audience if he wants to come up. Jake, do you have a few more minutes to hang out with us?
Yeah, I've got about 5 more minutes.
Okay, all right. So, Brian, I would love to throw it to you for maybe a couple of closing minutes. Just any advice, coming into the end of the year for, people who are either investing, in swing trades or day trades, whatever it be, just thoughts going into this last month.
Yeah, it's typically a seasonally, strong period. And a lot of times we see a lot of the more speculative names in particular really run. It's always been a very high profitability time of year for me and the next couple months, in fact. But just don't get caught up in the seasonality. Like, I'm sure people said, hey, next week, 100% upside. And they went and bought the weekly calls in the SPY, and they've just seen the premium bleed, and they're going to lose their money on that. Make all your decisions based on price. Don't just look at stories and that. Be aware of your levels. The same things I always talk about, Gav. It's where does the stock come from? Defines where we should set our stop, and where does it look like it reasonably has the potential to go. Gives us our potential, price objective. I don't like to say target because to me it's more about risk management always, and that would be the key, I guess, is just whatever you get involved in, don't just buy it because it's PayPal and everyone will agree they're a good company, but the stock's a piece of shit. It's just garbage. So is Roku, and so is Zoom, and so is Peloton, and a lot of these other names are just destroying people. And you don't need to do that. And then don't convince yourself, well, it's okay because it's for the long haul. It still hurts just as much to lose 30%. Why experience that first 30% drawdown? Why not wait for the evidence that the buyers are actually there and then buy it smart and manage risk and, set your stop and then hold it for your long term?
Yeah, I think that definitely makes a lot of sense. And real quick, just because you mentioned it, I wanted to get just two more questions into you. One is going, right now with the current market the way it is, how are you playing your stops? So what's, your general, maybe some rules of law around those? And then just one other thing was on the major indices, let's just go with SPY and QQQ. Where are you anchoring your volume weighted average price from right now?
Okay, just generally on my swing trades, the way I set my stops, I want to buy strength with a stock that's, ideally it's above its 20 and 50-day moving average, et cetera. It has a good volume pattern. And then I want to buy it after a pullback as it gets back above a flat to rising 5-day moving average. What I will do there is, once I'm involved in the stock, let's just say it's fuel cell. Let's say fuel cell runs up to 10, pulls back to 975, meets its 5-day moving average there. I might buy it at 980, let's say, on strength. And I'll either put my stop under the low of 9 that we just saw today, or just under it, whatever that number is. I'm just eyeballing it. Or if it were instead to, let's say, run up to 10, pull back, create a nice higher low at $9.40, I would set my stop either at 9.40 or maybe stagger them. So what I'm trying to do is I'm looking at a daily time frame and saying it's in an uptrend. On the shorter term time frame, I look to see that it's pulled back, it's gone sideways, and it's just beginning to emerge with strength. I don't want to chase a breakout past 1175 on fuel cell. I want to buy it at 975, 980, and then as it makes that higher high above the flat to rising 5-day moving average. So once I have that short-term definition of trend, higher highs and higher lows, that's in alignment with the definition of trend on the longer term time frame. So I will manage my risk based on where is the most recent relevant higher low on the time frame I entered. In other words, being a 15-minute chart, a 30-minute chart, wherever I see enough detail to identify that level and where the 5-day, where it is in relation to the 5-day moving average.
Perfect.
So,
And
yeah, so it's definition of trend.
perfect. And then for the major indices?
Well, you've got the gap in the SPY that occurred on October 14th. I think that's an important place that I have a VWAP anchored from, and that would bring us to about 460 and a half. It's rising, so maybe 461 next week if we were to break down from here. I've got a volume weighted average price off of the peak that it made on Monday, and we're just working our way through that now, which is a good sign. The average long this week is now making money because we're back above that. So the most interesting one really is the Russell 2000. And the Russell, you can see that today we almost touched the 50-day moving average, but we did touch the volume weighted average price from the September 20th low, and it's starting to try to stabilize in this area. It's still below that declining 5-day moving average. And of course, if we get back above that rising 5-day, flat to rising 5-day moving average, I'm considering a position in the Russell, probably with a TNA. And my upside objective that I'd be looking at first and foremost would be the VWAP off of the peak from November 8th, and that would be at about 236 and a half. If it were to get, if I were to see a rally up towards that, then I would begin to scale out of some. That would be, not my price target, but what looks like a reasonable place it could travel to for the first leg higher, and then maybe pull back, create a higher low, and then go on to break out to new highs.
Perfect. Perfect. Awesome. Thank you, Brian. Anything else you want to add? I'm going to go to Jake for his words too.
No, nothing else. Thanks for hosting it as usual, Gav, and enjoy your Thanksgiving, and same for everyone on this call.
Have a great one, Brian. Appreciate you coming on. Love doing this with you each week.
All right. Thanks so much. Bye.
All right, Jake, rolling to you. And also, shout out Ram Capital audience, big Trendspider fan. Once again, I'll say it once more. If you like technical analysis and charting and you're trying to get more into this, I pinned up top a link that will get you, I think it's 60 to 65% off of Trendspider. Take advantage. The deal ends this week. It's also one of the last ones on my page. So you can check that out. Really great platform. All right, Jake, going to you. Would love to hear, any closing thoughts, advice as we move into this latter part of the year.
Yeah, so for me, I'm really just kind of looking to see what is currently above and there's a couple ways you could do this. So one, you could go look at something above the year to date volume weighted average price. That essentially means what's the average price, very similar to what Brian's talking about, since the start of the year. Why is that important? Well, you're starting to get to the end of the year, which is tax loss harvesting. What does that mean? It means that you're holding a loss. Maybe you've got some other gainers that you want to offset with the losses. You're more likely going to see tax loss selling on these names that are below the average price, because that means that the average participant is currently holding an unrealized loss, and going into the end of the year, they're more likely to take advantage of taking those losses to offset gains elsewhere. So I'm really avoiding anything in too much of a downtrend right now. And it really depends, what is a downtrend? Is it over the last 3 weeks? over the last 2 years. But, for me, I'm really looking at things that aren't PLTR or Fubo. I own Fubo long term. I still think it's fine. I own GRWG long term. I still think it's fine. Pretty much have Spotify as well for the long term. So those aren't names that I'm talking about. I'm talking about more your PLTRs that people are holding from the 30s and are probably going to be like, well, that sucked. At least I can take a loss on PLTR and offset it. That's going to add supply onto the market. So just be wary of these names that are in longer term downtrends over the last year or so, because those are the names that are probably going to get hit the hardest when it comes to tax loss selling into the end of the year. So that may mess up some of these setups that look good. So just keep that in mind. That's something that I always kind of look at going into the end of the year. Spotify, for example, right? Spotify is kind of just down from where it started the beginning of the year. So you may see some tax loss selling there. I would probably start averaging down or averaging up. I bought this in the 220s, maybe for a little to add a little to the long term, but I'm trying to focus on things that are in uptrends, and some of those are hard to find right now. To be completely honest, even FCell, right, is technically down from where it was in the beginning of the year. So those are things to consider, and those are things that I think about when I'm looking at the charts and looking into the end of the year. But other than that, just follow price action. Seasonality looked great this week, and we could still have a strong Friday. We're getting a little strength right now into the last 40 or so minutes, but just keep that in mind, because a lot of people don't think about that phenomenon where people are actually just selling because they can offset their gains, and it may not have anything to do with the fundamentals of the company. But if you're trading technicals, you definitely want to focus more on the setup and the underlying supply and demand rather than what it does. Honestly, I still couldn't really tell you exactly what FCell does. I know it's in kind of like the EV. It's not an EV, but it's a technology that kind of powers batteries, or a new way of doing batteries. I couldn't even tell you. All I know is that it looks good. I know that it is a really good proxy for when these renewable energy types of names start moving, and that's why I like it. So yeah, FCell, First Solar, that's another one that I really like right now. I did take the profits on the initial spike. This morning, which I have no idea where that came from. I was just looking at my phone, what the hell is going on here? And I took the profits, and then I kind of got into the common stock. And I'll probably actually enter some of the options for January, maybe on Friday, after this theta decay kind of kicks in into Friday, with tomorrow being the market close. But First Solar is one that, if you look back since the beginning of the year, First Solar is up on the year. So that's one that may not see that tax loss selling. That's one that I'm actually loading relatively heavy in for that reason, as well as the fact that I just love the chart, and I think the infrastructure bill is going to play a role in helping these solar names continue to move up.
Yeah, really, really good stuff there with the energy names. And Jake, I believe you're running short on time too, right?
I'm sorry, what?
Are you running short on time too?
Yeah, I gotta head out here in a second. But one thing I'll mention, and it's kind of funny that Brian mentioned this, because I almost do sometimes the exact opposite, where I'm loading up a position in First Solar. I've got a decent sized common stock position, and then I'll probably buy the options. And if we do get a spike next week up to, my target is around 115, then I'll sell that impulse move. The impulse move is essentially that really big spike you get, which creates higher premiums due to implied volatility spiking. And then I'll actually hold the common stock in case that we do have more room to move up, but maybe we consolidate for a week or something. So I'm not in the options yet. I did have the January calls for 115 and sold those this morning, and I'll probably start looking at maybe getting back into those if we can hold around this 108, 109 and kind of play that into the beginning of December.
Hey Jake, one quick question. For the December, what is general, pulse or the seasonality for the first few weeks?
It's hard I don't really look at seasonality on a week by week basis because it's just a little too granular for me. But for December is one of the strongest months of the year across the board, especially for SPY and IWM. And so with First Solar being about a $10-ish billion market cap and FCell being about a $3.5 billion market cap, I'm going to use those as proxies for that strength and setup that I'm seeing on IWM. But for December, it's typically a pretty strong time of the year. Now, if the markets were looking pretty rough, which parts of the market are, you may see something like you saw in 2018, which is exactly what I was talking about. This essentially tax loss harvesting that's going on because a lot of these names have gotten killed. Roku. That's why I'm really hesitant on Roku, because if people are holding at a loss, they may continue to sell it and take advantage of that. So you just have to be careful with what names are maybe going to show strength. And just because the S&P 500 and the IWM shows pretty strong strength, I think IWM has like a 75% win rate since 2009 in December. And then SPY I think has I can go look real quick. 1 second. I think it's like 70% or something. Seasonality over, and I'm starting it since the financial crisis because that's kind of when this massive bull market has started. Yeah, SPY has a 75% win rate. That means 75% of the time December closes higher than November, and IWM also has a 75% win rate for December. So my style, I'm kind of looking more at the monthly seasonality rather than the individual names, because as we saw this week, individual weekly seasonality can sometimes throw people for a loop.
Yeah, there could be a lot of bias, and some of the factors may influence more drastically if it's on a weekly basis, and there could be some bias, and it's not a smooth and curve. I work in data science, so I understand. Sure, thank you.
Hey,
Thanks a
you're
lot.
very welcome. Thank you for the question.
Awesome stuff. All right, Jake. We're gonna keep this space running, by the way, and you're welcome to be here as long as you can. But I know that your time is a little bit limited. Is there anything else that you wanted to share?
Yeah, no, I definitely appreciate you guys always giving Trendspider a shout. We're definitely not paying you guys to say that, so I really appreciate you guys always giving us a shout and all that, and really glad everybody's enjoying the platform. And if you do want to try it out, it is 60% off. But remember, the 7-day free trial is what locks you into your rate. So if you sign up on Sunday and the sale ends on Monday, you still get 7 days to try it out. And if you want to see real life examples of how I'm using the platform every day in my own analysis and my own trading, just give me a follow and you can kind of see how Trendspider helps me get an edge in the market from different technical perspectives. And hope everybody has a great Thanksgiving. It's been a great year. Really thankful for everybody that's helped Trendspider get to where it is, and all the support I've received with my 5-month-old son Kuba. It's amazing how nice and just welcoming everybody is when he was born and all that. So thankful for everybody on here, and thank you for always running these and inviting me on. And I'm sure we'll do one of these probably next week.
Absolutely. We'll keep running it back. I'll be down in Miami, but I'll do my
Ooh.
best to keep hosting.
I love it. Well, hey, sometimes you need a break. So if not, no worries. But yeah, thank you, everybody. Really appreciate it. Everybody have a great holiday for those that celebrate Thanksgiving. And we'll I'm sure be on one of these spaces soon. And thanks everybody for your time.
Absolutely. Take care, Jake. All right,
See you guys.
let's keep it rolling with a few other names. I do have a little bit more time. Gerg, that's right. Get on up here. Good stuff. And I'm going to come back to you, Nick. Appreciate you being patient there. So I did, again, if you're in the audience chilling and you want us to look at a name that you have, feel free to drop it. I put out multiple tweets just asking people, what stocks you want us to talk about so we can dive into some of those. Also, fantastic audience we've had here today. A lot of people have been engaging on the tweets. A lot of people have been just coming in, showing their support. We see the emotes. We love having you here. It was pretty cool. We had the lead developer for Twitter's engineering team was chilling in the audience for a little bit. I thought that was great. Grant Capital was here. Got Jennifer Odlon. Love your, what's going on at Financial Times and everything. So love having this here. It's crazy what these spaces have allowed us to do. Plus, the market has been doing great since we started this space. I was down on the day 0.16 when we started. I'm up a percent since. So you know what? Maybe it's good luck. But all right, Nick, rolling back to you, I'm gonna throw a couple names, and then we're gonna go to Gerg. And Gerg, the floor will be yours in a second. But Nick, two names for you are Twitter and Square. Thoughts on those?
Yeah, I've actually seen a lot of people. Hold on, wait. Oh yeah, okay, my mic's on. Okay, I've actually seen a lot of people talk about Square recently. Let me just pull it up. So give me a second here. Let's see. Done. So actually, going way back, I just noticed. So using Trendspider, I have a little box here. Basically, my demand zone here, and going back all the way to December of 2020. Wow, that is far. December of 2020, I have a little demand zone here. May not, it's pretty decent. From 205 to about 190, so it's a little wide range, but Square tapped that top of that demand zone at 205 exactly, and has bounced since then. So something to watch there going forward. If that 205 holds, and if it does stay up and continue to rise up from this area where it's at currently at 216, can go up to around 223 to 225. Might get rejected there a little bit, might come down a little bit, but definitely one to watch going forward. And so hold on, let me just double check again here. One moment. Yeah, my 50 SMA is way higher, 20 SMA is way higher. So yeah, it's not something I specifically would trade at the moment until I see, true strength. But, watching that 205 hold is something to definitely watch going forward. And you believe you said Twitter, correct?
Yes, sir.
Okay, Twitter it is. And Twitter, let me just double check here. And yeah, this one's been beaten up too. So at a high of around 69 just about a month ago on October 20th, now sitting at 47.60. So this is one to watch too. Past 2 days, it's trying to reverse here, trying to bottom here, as well as, most of the other stocks have. This is definitely one to watch too. And going back, I see something in January 19th of 2021. There was a support right around this area where it found a bottom and actually went up basically just about 95% from here. So see if that area holds too, and that's right at around 44 to 45. So basically $2 to $3 under where we are currently. That's something to watch as well. And honestly, I'm not saying, this is what it is, but something to watch going over the next couple of months. There may be like a basing pattern here, but you possibly have an inverted head and shoulders forming. And like I said, don't take this word for word, but the only reason why I say it is you could possibly see a left shoulder popping up at around May 10th, 11th, 12th, 13th. So around the middle of May, just about. And if you wanted to consider this the bottom, if it is indeed the bottom, you possibly have a head forming around, this December area and November area that we're in right now, and possibly a right shoulder to come up in the future. But like I said, it's something speculative, and something to watch going forward. And that's where I'm at on those two. Really, they're all below 50 SMA, 20 SMA. I'm not looking at the average volume weighted average price, but they're all under those. So definitely something I want to be in right now, me personally.
Okay. Thank you, Nick, for that. All right, Gerg, the floor is yours. What's going on? What have you been buying, selling? What's your thoughts on the market?
Yo, what's up? I think slow day for me. So I plan to do no trades tomorrow as the market is closed, and Friday it's half day. So I'm not playing any weeklies, but I did buy some Baba puts. Like if you look at Baba, there's some support at 130. If it breaks that, you might see 88 bucks. That's why I'm swinging in puts for Baba. So the strike I'm going is for 100 for January 31st, if I'm not wrong. But I will double down my position once Baba goes sub 130 bucks. I did play so far in the morning, but I sold a couple minutes after open. The volume isn't great today, so I'm just watching from the sidelines today. What about you guys? What you guys
Uh,
playing?
yeah. So personally, I made, I guess, one iffy move today. I tried to catch a JP Morgan run this morning. Obviously, it didn't work. You can see it had a failed breakout. It came in at 945. It proceeded to go to 950, and then it just dumped all the way off. I had really liked how financials were looking throughout this week. FAS and a bunch of those others, and it's been climbing back. But this was a weekly, so you can't be playing weeklies like that, right? It's just going to completely kill you. So I got,
Yes, especially on a week like this, right?
yeah,
The
I got messed up
Q3, the
there.
half day week. Yeah, it's
Learned
very
my
much gonna
lesson.
eat most of your options there. So
I also have so yesterday, Stock Talk Weekly's here now. When we run that call with Stock Talk Weekly, I bought GENI calls, $10 calls for 12.17. Oh, and I haven't said this yet on the space, but nothing that we say is financial advice. Please do your own due diligence. It's simply a educational and ideation purpose call. So I have those GENI. I closed out of some Tesla and Facebook calls that just weren't going to happen, and I just cut the losses. Sometimes you just have to get out and just stop looking at them. And besides that, not too many other moves. I think that was pretty much most of it. Anything else, Gerg? I invited Stock Talk Weekly in for some TRT talk.
yeah, he can go on. What's up, Stock Talk Daily?
Yo, what's going on, guys? Sorry that I haven't been on many spaces today. I'm in Houston for Thanksgiving, so I've just been relaxing, not much trading today. But yeah, TRT, phenomenal close. Not much volume, but you don't need much volume to move a low float like this. We're gonna end the day probably with like 1 million volume. There was an influx pretty much right at 2 o'clock. Well, 2 o'clock for me, so 2 o'clock Central Time. There was a volume influx where I thought it would move. I didn't think it would retake this 1020 to 1025 to 1035 level, but now it did. I think if this holds above 1050, it can go a lot higher too. I've been waiting for this. I mean, people were like telling me, pretty much all last week, people were telling me it's made 100% move in 3 sessions. It can't go higher. But that's the issue with people that are too fundamentally or too technically focused. If you're too much of either, you can't catch these. Like once you have something with a tiny flow like this and it trades 30 million shares in 3 days, right? You have an automatic float lockup that happens. It's just basic math. Like if you trade 30 million shares on a 2 million float, basic math dictates that a certain percentage of those are holders. And that's what we saw with this name. I mean, think of most low float penny stocks that you've traded in your past, or anybody that has. They go on a monster 150% ripper, and then they crash hard. This one hasn't crashed yet. It's had these -5, -6, -7% days that get eaten up, and then it closes even or better. And so this kind of price strength to me is remarkable. I see TSDR down there, but he mentioned to me on the comments earlier, like there's no sellers. There are no sellers. If you look at the level 2 tape on this, like every single day, there's no sellers. So the people that bought this last week in the 4s and 5s and 6s and 7s who are up significantly aren't selling it. So that to me says like, okay, there is a value case here. And I mean, even today, after today's monster run, it's going to close at like a little bit over 40 million market cap. It's a nothing. It's a nothing burger. It's a tiny, tiny company that has a lot of room to run on the valuation because they're profitable and they're trading at literally effectively 1.2x sales, which for that sector is nothing. So once you're in really early, there's a lot more room, and people will tell you like, hey, it's already ran. And I'm not saying don't take profits either. Don't get what I'm saying twisted. I'm not saying like, hey, you should hold and hope onto every runner. But if your thesis is still intact, if the thesis you went into the trade with is still intact, then it makes sense to stay in the trade. I don't like get in and out of trades based on profit targets. A lot of people do that. I don't go into a trade and say to myself, I'm making 100% and then I'm out. I think that's stupid, and I think that's arbitrary. I have a thesis on the trade. So if I go into a trade and I think the company's worth 6 times more than where I'm buying it, then why would I get out after 100%? So it really just depends on your thesis. Like if you're coming into the trade and you're saying, hey, this company's worth 6, 7, 8 times more than it's trading at right now because of its peers, why would you sell that stock up 100%? If the stock's up 100%, then you're only, a fraction of the way to that thesis being fulfilled. And maybe your thesis always won't be that. Maybe it won't always be like, hey, this company's worth 3, 4, 5x more. Maybe your thesis will be the stock should trade higher because the sector's hot. Yeah, in that case, it makes sense. Go ahead and have a profit target. But if your thesis is fundamentally driven, it can't be fulfilled until that fundamental story is fulfilled. That's just logic. So be aware of the reason you're taking a trade for, is what I'll say. And don't let people deter you from that. And don't let the price action deter you from that, is what I would say. I was sitting on this with full size and waiting. And, now it's starting to get to those levels where I think it could make another leap move. So, yeah, that's just a TRT in a nutshell.
Yeah, I'm grateful to you for getting me in. I got in high and I'm still up 13%. So money's money. I love to see it running. What other stocks perhaps are exhibiting, in your opinion, a similar characteristics to this, low float, kind of mix of all the right conditions? Are there any others that are on your radar?
Yeah, I'm always looking for low flow plays. One today that I was looking at was LOCL. Actually, it had a huge run today. I think it was up like over 50% at the peak. It was a high redemption D-SPAC. The Super 8K hadn't dropped yet, so I hesitated on starting a position, which was a mistake, obviously. If I had picked one up today, that would have been a nice trade. But that was another one I was looking at. Pretty much any of these SPAC names that are coming out of merger that have had high redemptions. You wait for them to file the Super 8K when you're going to get more context on how many shares are available post merger. This one, from what I had looked at, and I talked to SPAC Track about it, we were seeing 1.7 million float. It could be closer to 2 million, but we wouldn't know that until after the Super 8K. So I hesitated, but obviously that wasn't the greatest move because the stock ran 50% today. But sometimes people will find it and you're like, oh wow, I was still finishing my due diligence and I didn't get a chance, and that sucks, but it happens. It's better to do your due diligence before you get into trade anyway, even if you might miss it. Like, it's still a good principle to have, because you don't want to be just like slapping trades without knowing what you're buying. So the LOCL was another one I looked at, and there's a bunch of these potential high redemption D-SPACs that I'm looking at, but I also haven't been working too hard this week. I've been kind of just chilling, as I'm sure you've noticed with my tweets, and I haven't done many spaces this week either, but this is kind of a week off for me, so I'm not as aware of every single thing that's running as I normally am.
Yeah, and also big congrats on getting written up by, was that Seeking Alpha?
Yeah, I mean, I've had my differences with Seeking Alpha for sure, especially when, the Wikipedia style contributions where there are random people writing. But yeah, that was Brian Stewart, who's the editor over there. So yeah, that was nice that he covered that interview. I thought that was nice of him, so I give him a shout out. But not necessarily my favorite news source, that being said.
All right. Well, we got Axios and Financial Times reporters in the audience, so maybe they'll be your next write-up. Who knows?
Yeah, come on, Axios, come hit me up. Let's go.
Yeah, yeah. Listen, Stock Talk Weekly, he's got the connects. Okay, I got a name that's been coming in hot, and also to everybody, please drop the names under the tweet that I put out if you want us to look at something, because my DMs are flooded right now, and I'm probably not going to see it in the DMs. The only thing that I would love for people to DM me about is if they want to be on the Twitter Spaces Google Calendar. That's the way that you can know when all of our spaces are happening. And actually, we've got the big three up here. We got Gerg, Stock Talk Weekly, and Stock Market News. And we're all, pretty much all of us have our spaces on this calendar, I guess. So if you want to be on that, just shoot me your email. I already have like 40 DMs from people that want to be on the spaces calendar. Again, that is just, you will know when all of our spaces are. They will just easily be put on your calendar. You won't have to look at Twitter and be like searching through it. You'll just be able to know when they are. That's what I love DMs about. But for individual names, just feel free to comment those on the timeline. I put out a tweet. So one of the ones that I'm getting a few about is Mrvl, which has earnings coming up. Gerg, and then I'll go over to Stocks Weekly. Any thoughts on Mrvl?
I have no opinion on that. I can check the earnings though. What's the ticker for that?
Mrvl.
Let's see. MRV. Okay. Let's see the past earnings. So the earnings are on December 2nd. In the past, the move was around 6%, and the expected move is 6.3%. And the options, the volume isn't there now. I wouldn't play this earnings for me. This isn't for me. Stock
Okay.
weekly.
I'm familiar with the company. I've traded this before. For me, looking at the chart right now, this is a move coming out of a bounce. This isn't necessarily a natural uptrend. You can tell this is a bounce off the 7150 level, and that's not really a well-defined support either. Like if you go back through November, it's kind of a broad support. I would say that level is anywhere from like 7050 to 72. This time it bounced off 7150. I would like to see if it encounters resistance again, trading up to that 75 level where it got rejected more recently. At that 75.50 level, there's a rejection there on the 22nd, and it's been trading down all the way to that 750 level and then bounced. I'm looking at the 1 year chart. Hold on.
Oh, real quick, while you're looking at it, I totally should have
Yeah.
mentioned this to everyone that's in the DMs because I just got hit by a wave. I need your email. That's the only way I can add you to the Google Calendar. So please make sure your email is in the DM. And if you're ready to DM me and you didn't have your email, just please send it because otherwise I'm just going to ask you for it. Expedites the process. Back to you.
Yeah, I think I would watch for a retest of 75.50 before I entered this one. I think if retest 75.50, which it looks like it's on its way to do, it's trading at what 73.80 right now. If it retests 75.50 and gets rejected, then I would play puts back down closer to 71.50. If it hits 75.50 and breaks with volume, then I'll probably look to get long for a little bit of a move, but this is another one that's trading in one of those no man land areas, I like to say. But yeah, I would wait for. Honestly, it's forget 75.50. It's more like a take of 76 with volume. That would be significant in my opinion. If it can take 76 with volume, I think this trade's higher. But I'm going to wait for a retest there. I don't see any point in going long at 74 if there's such a steep rejection up there at 76. You know what I mean? You don't have much of a move. You have a $2 move there before you have to assess if it's going to get rejected. So I would wait personally to go long or short on this. That's just my opinion.
Okay, sounds good. Now, I apologize for, I don't want to end it too soon. Um, but I do have a meeting with my CFO at 4. So with that being said, first off, really cool thing I just want to mention to everybody. There's a brand new site. It's called direcon.com that I'm just looking at. I have a meeting with their team later this week, but it's one of the first sites that I've seen that gives you analytics on spaces. So they're tracking analytics, and over 5,500 unique people have come through this room. This is really cool that we can finally see this stuff. And I'm going to.
How do you see that now?
Yeah, so direcon.com. If you are the host, you have to be the host, and you're hosting a live space, you can plug it in, and it tracks and sees exactly how many total listeners and your max listeners. And then I'm going to actually try to get them to give me the upgraded version. Of course, I'll try to get it for free in exchange for promotion, which they're not doing yet, so I'm just shouting it out for free for now. But they're going to show like stickiness, average time listened. But yeah, people are getting innovative. With that being said, I do want to give everybody a couple minutes for wrap up before I go to meet with Jeff, my CTO. Welcome back on, Nick. Just want to give you a couple minutes if you had any final thoughts you wanted to share on the market or stocks or anything else moving forward.
Yeah, nothing much on my end really. I just want to say happy Thanksgiving to everyone. Wow, can't even speak, I guess. Hopefully everyone is safe and healthy. And other than that, just trade smart, be smart. Always remember, never give up. I know there's so many times where people want to give up. There's always going to be losing trades. You just got to learn from them. Other than that, I hope everyone has a great evening, great Thanksgiving, great weekend, and great week. And I'll see you guys later.
100%. Appreciate you coming on, brother. Okay, Gerg,
Thank you.
any closing remarks?
Everyone, take the day off. Enjoy the week. Come back one day. The volume is going to be dead on Friday, so enjoy the weekend. Take the next 2 days off. See you on Monday.
Yeah, I'd say this is definitely, it can't hurt. Oh, shout out to Pierce. Pierce from Trading View. You got to get on one of my spaces, man. I see you showing in the audience. Okay, Stock Talk Weekly, or Stock Talk Daily, as we are now calling him. Any other closing thoughts?
Stock Dog Daily. Yeah, I mean, I'm kind of with Gerg on that. I've been taking it easy this week. I haven't done much trading or too much tweeting either, honestly. I did a couple tweets yesterday. Obviously, we had that Spaces with Nicola DeMasi yesterday. Thanks, everybody who tuned into that. Thanks for recording that, too, Wolf. I appreciate that. A bunch of people were asking me for that recording, so that was helpful. But yeah, I mean, I'm taking it easy this week. I'm obviously not trading tomorrow. Markets are closed anyway, but Friday I probably won't be doing much as well. I mean, we have an early close on Friday, so Monday, I think I agree with Gurg. I think you get a big surge of volume on Monday, and I think you get a resurgence to some of these names. But we will see. Of course, I won't be doing much over the next 2 days. Maybe on Friday, if I see some crazy good opportunities, I might dip my toe. But yeah, I'm just keeping my eye on TRT. Really liking the price strength on that one. It might even get above a 10.50 close here today, which would be outstanding. So we'll see about that. I'm also looking at RDW, obviously, which has been, most of my picks over the last few weeks have been killing it. That's one that has not been killing it. And it's been kind of weighing me down as well. So I want to get those earnings out of the way. I hope they do that sooner than later. I was expecting them actually on Monday of this week, and they still haven't come out or given an update. So that's kind of disappointing, but I'll be keeping my eye on RDW earnings. Ivan just dropped options today. Interesting to see if that trades up to 11 with the options. And then, of course, DMYQ, keeping my eye on that. Kind of came down lower today. I'll probably add more if that comes back down under 11, which it could, although the meeting's on the 3rd, so maybe not. We'll see. But yeah, that's what I'm watching. Those are the few names that I'm watching right now. And again, not doing too much trading this week.
Perfect. Appreciate the list there. And real quick before I go to Evan, another shout out to one of our listeners, Tim Cook. Tim, I'm sure you're busy or something, but Tim Cook, you can probably see him up here. He's verified. The best voice you'll ever hear on Spaces. Just the man was built for Spaces. That voice is something of beauty. All right. With that being said, going to you, Evan, for any closing remarks.
Well, I definitely don't have the best voice for Spaces, but we're here and we're moving. First, we kind of ended up here with just the OG crew. We're always on these spaces, everyone up here. So just make sure you're following us. If you're enjoying these spaces, which I mean you're in here after 5-10 minutes of wrap up. And how long have we been going for? I don't know, over an hour and a half? Almost 2 hours?
2 hours almost?
Okay, yeah. So if
I
you're
don't
in
know.
here at this point, you're definitely enjoying it. Make sure you're following all these speakers up here. Shout out to Bullish Rippers, the Green Raccoon. I run that account. We're getting close to 10K. So if you want to support me at all, make sure you give them a follow right now. And everyone have a happy Thanksgiving.
Love it, love it. Yeah, my Galv account fell down. I don't know, it disconnected. But thanks to everybody that followed that on the personal. Trying to get that up to 7K this week. Yeah, excited. To go into Thanksgiving, have a day off. Not have any spaces planned for tomorrow, but you never know. Maybe I'll just get bored and end up on spaces. I've already hosted for about 10 to 15 hours this week. Next week, going to be in Miami at a bunch of these NFT conferences and stuff along with that. So I'm going to try to schedule an NFT space as well as a crypto space for next week because those did really, really good last week. So I want to bring those back. As always, this Friday, we're still going to have 2 spaces. So 12 p.m. EST this Friday, I always do the weekly Howl. That is a space focused on transparency and investing. You can come on and listen to 5 to 6 investors just completely transparency, explain what they bought and sold that week, wins, losses, why they did it. And then Friday at 4 p.m. EST, stock market news. I think Stock Talk Weekly is going to co-host it now too. Myself, all will be on a space at 4 p.m. to wrap up the week in the market. Choppy week. We talked about this. We talked about seasonality. We talked about options expiration and so many other things, and things that I've never been knew about before going into this. So you have people that are experts coming out to these. So again, we got the OG crew up here. Make sure that you're following them all. If you're enjoying the spaces, please throw the Wolf account a follow. So excited to get up to 37K and keep it rolling. And we'll be back on shortly. I'm gonna hop now for some meetings. Got some stuff going on. Some drinks later. Everybody, take a step back this Thanksgiving. Even if you had a rough couple weeks in the market, I think there's a million things to be thankful for, and I am thankful for all of you. All right, everybody, take care. Have a good rest of your day.